Hey, welcome back to Two Super Guy Trade Stocks. I'm Dylan.
And I'm Vinny. And holy crap, this week we got earnings from Google, and it may or may not be a fantastic time to buy one of the Mag 7 stocks, one of those fantastic companies at a good price. We're to look at the earnings report. We're going to talk a little bit about it. It's pretty interesting. You got you intrigued there, don't I?
I think Google's undervalued comparatively to all the other ones. So yes.
Well, one of the things that pops up really quickly when you look at them, like their headline data on like CNBC here, PE 18, 17.95 forward PE. This is in a market where the Schiller PE ratio is what, like 34?
It's high. It's
Yeah.
very high. I don't know why people are so down on Google because it's kind of always been that way for like the last 3 or 4 years.
Yeah, don't be wrong. They have antitrust like headwinds for sure, but I want to talk about what the business is doing now, and then kind of like we can imagine the future a little bit together. Um, so this is their most recent earnings release, just reported this week. Basically, their revenue was up 12% on the top line. 14%
Yeah.
of currency were
Jeez.
stable, right? Which very unstable currency markets right now. Their Google services revenue up 10%. Google Cloud up 28%.
Nice.
Operating income increased 20% and they expanded their margin by 34%. Does that sound like a dying business to you?
No, this is
Yeah.
awesome.
Yeah.
Sweet.
Yeah. They're growing top line, double digit growth. They're actually making that profitable because their margins are expanding. That's and then they have cloud, which is growing at a big chunky number of 28%.
Yeah.
We're going to see it a little bit later, but it's profitable too. It's wild. I love it.
Oh, I mean, that's huge. Oh, man.
Absolutely. All right. So once again, just reiterating, 12%. Last year was 15%. A little slight deceleration from last year, but still double-digit growth, which is great. They did this on the back of actually growing their operating income. So 25 billion last year, 30.6 billion this year. Right. All right. Love it. Love to see it. And that was through margin expansion from 32% to 34%, meaning that when you can expand your margins, you're obviously delivering a product which the market values, and that there's a kind of a ability for you to increase your prices effectively. That's what you're doing when you operating margin expands, right?
Now, this
That's
is
a
the
good
same
business.
company that before this drop was at 190 is now is at 160.
Yeah. All
That's
right.
pretty
Yeah.
sexy, man.
Yep, exactly. So one thing I will caution you is that when you look at the EPS numbers for this quarter, they did have this big chunky other income, 11.1 billion, which they do break out later on a little bit of where exactly that came from, kind of. But I'll give you the theory there. Um, as far as the operating segments go, and in terms of profitability, this is what I want to highlight here. So Google Cloud, right, 900 million last year, 2.1 billion. So they're 28% growth, and they doubled the actual operating revenue
Oh,
profit from
man.
that unit. Okay, I understand it's still a small number when you compare it to search, but growing. All right, you'll
Yeah.
love to see it because that's the next wave of their profit engines going forward, which is
Yeah.
amazing.
That's huge. Man, that's awesome.
Yeah. And then they are so confident in the future of the business that they're reinvesting aggressively. Think about it from that standpoint. So they are announced that they're increasing their dividend by 5%. So if you're an owner of Google stock, you get another 5% pay raise, effectively, and your cash flow from just owning the stock. Um, and they're going to take $70 billion and buy back shares. It's 70 billion.
So, question, would
Yeah.
you rather like 100 billion and no dividend or 70 billion? That's not, hold on, those numbers aren't right. That was way too much of an adjustment. But you know what I'm saying? I get the dividend. Awesome. With where the economy could be going right now, there's a little bit of uncertainty.
Hmm.
I don't think we should be starting a dividend right now. We should just stock repurchases. Awesome.
Yeah. Yeah. I mean, fair. When you think about, when we get to the end of this, we'll see the conclusion as far as like how aggressively priced the stock is right now and whether or not I would personally prioritize share purchases. But I do think it's a good idea when companies are very profitable, like Google or Alphabet, that they're actually doing both.
I
I
agree.
think that's
Yeah, that's
ultimately
fair.
the right answer. So as far as that 11.2 billion in other income, this is where it comes from. $8 billion unrealized gain on our non-marketable security related to an investment in a private company. Anyone you want to guess what company this may be? They don't tell us, but
I I have no idea.
so they own 7.5% of SpaceX. So I'm guessing that's where that's from, but we don't
Okay.
know that for a fact.
Nice. Dope.
Uh, yeah. Yeah, I know. Well, hey, there's another aspect of it. Not only do you love the core business of Google, but you're like, oh, I also own a tiny bit of this space exploration company, whatever the hell that is.
Dude,
Uh,
clouds in space. There we go.
yeah, there's clouds in space. Exactly. Yeah. So they're sitting in a fantastic position here. $95 billion in cash on their balance sheet, right? Cash and marketable securities, and then they only have $10.8 billion in debt. Yeah, I don't know. I put red there as you could look at it from multiple different ways. You could say, I wish they had more debt. I wish they had borrowed a ton more at 0% and bought back shares when they were, under $100 a share. But yeah, such is life.
Yeah, I mean, that's pretty sexy, man. $100 billion, 10 billion in debt. That
Yeah,
is, I mean, that's impressive.
it's a very
70
pristine
billion in
looking
share
balance sheet.
buybacks. Jeez.
Yeah. So we get to the actual cash flow statement here, right? Net income 34 billion. As far as net cash provided by operating activities, 36.1. So this is how much cash is coming into the door after they've paid all their expenses on a regular quarterly basis, right? They do go ahead and purchase property, plant, and equipment, 17.2 billion here. That's them reinvesting. And frankly, if you're seeing the kind of return on invested capital that these guys are, when you're getting 28% revenue growth and it's profitable, you've doubled the profits in your cloud segment. Throwing $17 billion or $75 billion in total spend this year, it really isn't unreasonable. I gave it a yellow flag. Sure, I always want to be cautious about your reinvestment, but it's still something that I think makes sense when you're seeing what they're seeing, right?
Yeah, for sure. All right.
And then, this is showing what they did for repurchase in the last quarter, $15 billion basically in share repurchases. The dividends down here too, if you're curious, 2.4 billion to give it an idea of the context and the size. They're definitely allocating way more of their
Yeah,
resources towards share purchases than they are towards dividends, but they are growing it.
perfect.
All right, free cash flow, baby. All right, so they're going through an investment cycle. Like I said, it was $57 billion in trailing 12-month free cash flow last year over the last 12 months. Now look at $75 billion this year, so they're growing that number a lot, which I think is the right thing to do when you're, like I said, you're seeing the returns they are in terms of investing in their cloud infrastructure. But we're going to use that number going forward here in a second to kind of calculate what their kind of free cash flow percent of return is. So some of the things I noticed from the conference call, basically AI was something they talked about extensively in Sundar's statement, all right? And that they talked about, this is an interesting kind of perspective I hadn't really considered before, why they have three different AI products. They're like, we have an AI product for the 1 million most kind of AI dependent users out there, right? So that's the actual what do you call it, app that you can download. That's for people that are going to use it to write program and that sort of stuff, but that's not designed for everyone, right? Then they have another program for the next 10 million people that are using AI, and finally they have AI for everyone. That's the summary we're seeing when we Google results, and they're like, yeah, over time those kind of more niche applications of AI will allow us to make that a better product, but it's really they're developing these three different products in conjunction with each other in order to serve different markets. So I think makes a ton of sense. Rather than saying like, oh, we can't compare to ChatGPT because we're not even trying to use them to the same perspective. This is really a different product for different folks and different use cases. So I thought that was an interesting thing I hadn't taken before.
Yeah, I actually did not know that. So
Yeah.
that's awesome. Sweet.
Yeah, and then they talked about, obviously this is that we get to that return on invested capital kind of portion here. So 26% increase in conversion rate using the AI ads, right? It really is indeed like putting the rubber where the meets the road, so to speak, right? They're actually having positive returns from this. They're not just investing in AI infrastructure for nothing; it's generating actual returns and results. Therefore, they continue to invest in it, which I love, right?
Yeah.
So these things have been kind of recapped here already, where it was operating income up 20% to $31 billion. Margin had increased 2.3% in the quarter. And that free cash flow, like I said, was 74.9 billion over the last 12 months. As far as tariffs, this was a question that came out really point blank with. It was too soon to say much. The de minimis exemption is basically any product coming in the US less than $800, is not subject to tariffs in individual shipment. So this is where we individually buy our stuff from Temu, Shine, or
Right.
AliExpress or whatever. The elimination of that, which I think is supposed to take place like in May, if I'm not mistaken, would certainly have an impact upon ad spend from these Asia Pacific regions. However, they were kind of careful to point out that it wasn't a significant portion of their overall ad spend they were experiencing prior to this anyways. That finance, particularly insurance, was, I guess, the big one this quarter. Secondary retail, they didn't break down retail too much more than that, but travel was another one. So they're much more I don't know which portion of retail is Asia Pacific brands advertising the US, but not going to be hopefully a significant mover for them. And this is another thing that's kind of come out of the weeds here a little bit too. Like one thing about
Yeah.
Google, yeah,
I
is
was waiting for
not
this.
only do you own this badass legacy ad business and the Google Cloud, which is growing phenomenally well, but you also own all these other like little moonshots, or other bets as they call them. Waymo being one of them. That their ride that they had given was 5x over last year. That they're opening in Atlanta this year, and then Miami and DC next year. So you're
So,
getting basically like a call option on this future of autonomous driving. And frankly, like from what everything I've seen, Waymo is the one that's most likely to bring this to the masses as far as like having a autonomous driving rideshare platform, right?
it's not even
Much more than
close.
Tesla.
So, I'm in Arizona. We've had Waymo for a long time.
Hmm.
I don't really use Uber for Lyft anymore. I just do Waymo. It's awesome. Um, I don't understand how Tesla investors are not utterly terrified because every year they talk about robo taxis and they're like, oh, it's coming up, coming up. They already have it and they've had it for a while and it's excellent. Like, dude, it is awesome. It, like, guys, Waymo's sick. It's so
Yeah.
cool.
I mean, I remember seeing on like charts of miles driven per incident or disconnect incident that Waymo was one of the better ones in the world as far as how advanced their technology was from a autonomous driving
Yeah.
standpoint.
I
I
don't
don't know.
think enough people are talking about this. This is so dangerous for Tesla, and Google can get so much more revenue. It is insane. Granted, I don't know why they're choosing Jaguar as their cars. It's like a very expensive electric car, but whatever.
Yeah, and they're partnering with different companies as far as automotive manufacturers and some of these rideshare companies. Like I think the Uber is one that they partnered with in certain markets, as opposed to being independent. So they have to navigate the regulatory environment, which is super complicated. I can only imagine.
Yep.
Um, and then the last thing I wanted to comment here on here, they kind of attributed their gross margin expansion to better product mix. That they're selling more profitable products than they have in the past, which is why their margin was expanding. So all right, let's talk valuations here, right? So free cash flow yield is the one I like to use. It just kind of helps me put in perspective and helps me compare across different investment vehicles from like stocks to bonds, that sort of thing, a little bit better. Um, Market cap for Google as of close from this past Friday was 1.974 trillion. At $84.4 billion in net cash, and they had that $74.8 billion trailing month free cash flow, meaning they have a 4% free cash flow yield, which for a company like Google, to me that's like that's buy it now price. I literally after I looked at this report and calculated that number, I went to my IRA, which I hadn't logged into in like 2 months because of the market situation. I didn't really want to see how bad it had gotten. So once I got over the initial shock at seeing the number there, I was looking at the cash flows to see how much money I have available to try to buy some more Google.
Yeah, I'll buy some. I mean, this
Yeah.
is this is wild. Also, just to go back to that, I had someone from out of town visit me from Mass, and they're like, "Dude, do you know you have like driverless cars? Like, Tool pulled up next to us, and there's no one there. They're just empty." I was like, "We've had that for years. I just kind of forgot that like every city doesn't have that. It's like
Yeah.
we've had that for a while." So yeah, this is awesome. I still think I've had Google and Meta as my most attractive buys. Um, it's really hard to just not pull the trigger on more Google right now. I might just a little bit at least. So
I would agree right now. It's rare in these videos for me to say that there's something
it
I want to
is.
buy. And Google right now is what I want to buy because people talk about these Mag 7 stocks and how fantastic they are and how you never get an opportunity to buy them for a decent price. It's when you have negative news cycles where they're talking about like, oh, like maybe broken up by antitrust. That's when you get those opportunities to buy these fantastic companies at good prices. Hell, we may even see Big Daddy Warren start buying some Google at some point in time because he's talked about
Whoa.
how much he missed the boat on that.
I don't know if I've ever seen Vinny this excited to spend money on a stock. Yeah, I'm gonna take out a second mortgage. That's all I needed. We're good. I'll take out a second
Uh,
mortgage.
I
Hundreds of
love it.
thousands.
Get you guys to the next one.